when you can see it?
Not yet. Yes, now I see.
Yeah, same here.
So now you guys can see it?
Yes.
All right. So we have done one pattern before. There is behind one pattern, but don't you worry, we're going to cover that up too. So right now we are currently studying chart patterns. We've started from chart patterns, and there are several types of chart patterns which we will be studying. So the module 1 is going to be reversal chart patterns. So these are the chart patterns which will tell you when the market is going to give us a sharp reversal. If we are declining, if the price is decreasing, if the market is collapsing, what level is it going to reach? And then it's going to blow up. It's going to like start increasing. Or if it's rising, what level it's going to start to collapse, or what level is the price going to reverse. It's pretty much clear from the reversal chart pattern, the name itself. So we're going to be studying these chart patterns. After that, in the second module, we're going to be studying about the continuity patterns. Now, these are the patterns which will tell you that when the price will continue the pattern that's already the trend. Like if the price is increasing and that pattern forms, then the price will keep on increasing, because a lot of people think that when the price increases, that's the time when they can do some short future trading. They can short it. They think that the price is going to decrease. So those patterns come in hand, which indicate that the price is going to keep on increasing. And after that, or if it's decreasing, there are patterns which will tell you that the price will keep on decreasing. And in the third module, we're going to be studying about neutral patterns. Now, with neutral patterns don't really say that it's going to be bullish or it's going to be bearish. Neutral patterns just say that it can go in any direction. So they are basically in an indecisive period. That's if that pattern is forming, that's super indecisive. The market can go in any direction. It could go in long, it could go in short. So you just have to wait for the breakout, and whichever direction is the breakout, we get a good move. So today's chart pattern, let's start with today's chart pattern. That's going to be the rising wedge pattern. Now I want you guys to take a minute and just see at this chart pattern. Just take a minute and just take a look at this beauty. It's one of the most beautiful chart patterns. It's one of my favorite chart patterns, and one of the most important ones too, because they give one of the best moves. And if you spot them, that's like a golden day for you. If you spot that on the graph, and if it's forming, that's a golden day for you. So just take a minute and see what's happening here. And then I'm going to ask you what you guys noticed.
Okay.
All right, so the minute is over. This was a quick minute. It was my minute. It's not like a clock minute. So what you guys see?
It's smaller from it's go to smaller downs and ups.
Exactly. So what basically is happening? Let me just share my annotations. So what basically is happening that the graph, it's trying to squeeze in. You know what I'm saying? It's trying to squeeze in this wedge. That's why they call it the wedge. You know what's the wedge? You know what is a wedge?
A squeeze.
Yes, come again.
Oh, like a squeeze, like going narrower.
Yeah, wedge is like something that is broader on the one side and smaller on the other side. As you can see, this is a wedge. Like in science, they give us wedges like this, and we have to like do some things like, oh, there's a ball, and then you like roll over the ball and start clapping that, oh, gravity exists, stuff like that, which is useless completely. So we do that. and we make our children do that. So this is a wedge. Now that we are clear what a wedge is, so if we were to draw a line here, that's formation of a wedge. If I extend it, now you can see that it's a wedge.
Oh, yes.
Yeah, apologize me for the treasure handwriting and stuff. That's my weak point.
No worries.
All right. So yeah. So what's happening here? The price is consistently forming lower highs and higher lows. What does that mean? Just mark. So what you actually have to do, you have to mark all the highs. This is the high, this is another high, and this one is one, and then this one is one, and then you have to mark the lows. This one is one, this one is one, and this one is one. And as you can see that the highs are consistently like they are high, but they are like they are like less high as compared to as you would think it would be. But like the lows, they're rising up, like the higher lows and lower highs. That's kind of a thing is happening over here. So the price is squeezing in the wedge, and that is a very beautiful time whenever the breakout happens. That's a reversal pattern. So right now we are in an upward direction, right? The price is going up.
Yep.
So, but the price
That's
is
it.
going in a wedge. As soon as the price breaks this wedge right here with a red candle, that should be an alarming point for you. That's your entry right here. So you would ask me, where would we take this where would we take the entry? So as soon as the price breaks out the wedge, that's your entry point. You can just mark the top of this candle as a stop loss, or you can mark another candle over here as a stop loss, or you could even take this this line over here as a stop loss. So how do these lines come into place? This basically just trend lines. So what are trend lines? Trend lines is just a line that is passing from the highs, and there's another line which is passing from the lows. So you just like match the highs, match the lows. That's your trend line. That basically would tell you what the trend is. It's an upward trend, downward trend, what kind of trend it is. So right now we are in the upward trend. So what's going to happen as soon as we're going to have a breakout from here, the price is going to reverse, since we are discussing the reversal chart pattern. So can you tell me what's going to happen when the price breaks down this area which I've highlighted? What's going to happen? Is it going to go up or is it going to go down?
Down.
Exactly.
Oh yeah, down.
It's going to go down, right? It's pretty simple. So how we're going to take our trade, basically, if I were to take a trade, I would mark this area as a stop loss, and I would just take the trade over here. You can also mark the top of this candle as a stop loss, and then you can use trailing stop loss, because every time there is a rising wedge pattern, the drop is really, really bad. I'm talking about big drops over here. Usually like big drops happen. Small drops can happen too, but big drops can happen too. So what you can do is you can estimate the difference between these points right here, the start of the wedge, that's and however much are these points, you can mark that much of a target right over here. Make sense or not?
Yes.
Oh yeah,
So
makes sense.
yeah, so just by knowing when the rising wedge pattern, now obviously you would think that this is pretty simple, but it is really not that simple, because when you are right now, you're just looking at not actually a graph. It's just like it's like a representation of a graph. It's like really, really simple form of lines. But when you are actually looking at the graph, it's much more harder to spot these bad boys than it is over here. So most of the times you would be like, oh my God, it was right in front of me. Why didn't I see it? Because in the actual graph, what's happening is that not just one candle will be forming over here. There will be like multiple candles, multiple candles over here. And some of them would be giving wicks up here. So you couldn't really see it. It's like a
On which
mess.
time frame do we see?
As I've told you, patterns work in every time frame. So if you were to spot this pattern frame, let's say in 1 day pattern, or weekly pattern, then you're a millionaire. Then you just got a big spot open and you're a millionaire. But if you spot it in a 15 minutes time frame, okay, you could have some bread money, but it is on the luck. So basically, we will be looking at chart patterns in every time frame. There will be some chart patterns
Okay.
once we go from here, right? These are like reversal chart patterns. Reversal chart patterns are pretty basic. It's not really hard. It's not really tricky. Once we go to those neutral and those continuity patterns, they are a little tricky. They are like they'll mess up your brain. They're like, oh my God, they're hard to spot. In those
Okay.
patterns, there will be, I will tell you one or two patterns that are only applicable in the higher time frames. And there will be some patterns which are only applicable in the lower time frames. So there I will create a difference. But for now, they work in every time frame. So you have to look at them in every time frame. Basically, this is one of the aspect of how we predict that one coin is gonna like give us a big giant move, just like the steel the other day. The steel gave us like big giant moves, right? So normally, how these giant moves happen, we find these patterns in the higher time frames. So whenever there's a higher time frame, whenever there's a pattern formation in the higher time frame, obviously, if it's like a 1 day pattern, right? Or maybe a weekly pattern and a weekly time frame, and this pattern is forming. Let's say that it gives us a breakout and then it goes right here, just like it starts to dropping. What kind of drop do you think it is? It's a significant drop. It's like a significant drop. It's that kind of a drop that if you were holding this coin in spot, you could have easily had like half out your entire holdings, and you would be in like a considerable loss. So in the high time frames, obviously you can catch big moves, and in the shorter time frames, you can catch like small moves, make some quick money, get off the market. Daily trading. It's all about either it's daily trading or it's a swing trade. You are following it over the course of months and weeks, or you are following it over the course of days. Make sense or not?
Yes.
Yeah.
All right, so just moving on. We're gonna move on to our next. Now, there's another illustration of a rising wedge pattern, and as you can see, that previously we were in the upward trend. You can see right here. Let me just open my annotations real quick. Ooh, it's going in the upward direction, and then as you can see, the price is squeezing inside the wedge. You can see it or no?
Yes.
Yeah.
So as you can see, what's gonna happen after there? They didn't show you what will happen after that. Now, if the price breaks out this line right here, now then it's not
Yeah.
a rising wedge pattern. Then it's like a continuity pattern. It will continue to rise up. So we don't have no concern with that. We will learn that later and we will use that later. For now, we are only concerned when the price squeezes in a wedge and then it crosses the lower trend line, the trend line that's passing through the higher lows. Now, if it were to break this line right here, then I were to take a short entry, or I were to close my long positions, or I were to take profit on my spot holdings. I would sell my spot holdings and wait for another good entry. So no matter you are doing spot, no matter you're doing future, chart patterns come in handy in all of the formats of trading. But there's one other thing, that price usually when it does give you a breakout, it will still come back to retest this area. Let's say it gives us these two red candles, right? Now it's not going to be like a very symmetrical decline, like you would just start to see like red candles and like very simply get all the profit. Usually the price comes back with one or two green candles and retest this line. And usually what happens, if you are having a stop loss at the top of the candle, which gave us the breakout, usually it can hit. And then you will see it falling again, and then you'll be like cursing it, be like, oh my God, you had to fall by just after hitting my stop loss, and you'd be like, oh my God. So that's what's infuriating for some traders, because they put a stop loss and then it's hit, and as soon as it's hit, then you get the move in your direction, and then you just like see it moving and you can't do anything. So that is a problem, right? For that, I told you that what you can do is just you can just have a stop loss right over here
Mhm.
at the trend line, at the top trend line, which is, you can say it's resistance in that case too. It's resistance.
Mhm.
So that is one
Okay.
strategy which you can follow. And on the other hand, if you look at the other side of the screen,
Mhm.
there's this falling wedge pattern. Now, it's a completely different pattern. I mean, it's similar to the rising wedge, but we're going to study it again. But I'm just showing it to you right now because it's really similar to rising wedge pattern. Now, exactly like rising wedge pattern, in rising wedge pattern, we had the upward trend. In the falling wedge pattern, we have the
Mhm.
downward trend. And then again, the price is squeezing in a wedge. And when it gives us a breakout in the upward direction, it crosses the upward trend line, it crosses the resistance. Then what's going to happen? It's going to give us a big upward move. Make sense or not?
Yes.
So
Yes.
that's going to be falling wedge pattern. Basically, we're studying reversal patterns. We are studying when the price is going to
Mhm.
reverse from the trend it's having.
Reverse.
What's the time of
Mhm.
closing the trade? When is the time to opening a short or a long trade? What's like the confirmed time? Because whenever there's a rising or falling wedge pattern, the chances of you having a loss are very, very low. If it's a rising wedge pattern and it has given you a breakout in the opposite direction, then you can expect like a significant downward move. And if it's a falling wedge pattern, you can expect a significant upward move. The other day when we predicted one coin that is going to outperform all the other coins and end up in the top gainers, basically that coin was falling, it was forming falling wedge pattern in 1 day time frame.
Mhm.
So that's when it gave us a breakout, and then it started to like rise like a rocket. And then 15 minutes time frame is just like, oh my God, it's just like really big. But if you look at the
Mhm.
1 day time frame, it's really small, but the profit is all there. So falling wedge and rising wedge pattern, they are really, really important and not something you can ignore. So if you can spot one of these on the actual graph, then you'll be in for like a heck of a profit. Make sense or not?
Yes.
Oh yeah.
All right. So just move on. What else kind of images we have? Now, I gotta remove these annotations. All right. Now, here's a demonstration of an actual graph. Now, as you can see, if I were to, wait, if I were to bring this a little bit down, oh my God, what's happening? All right. I think it will take me some time to edit it again, but I think you get the idea here that the
Yes.
price was initially rising. It was in the upward trend, and don't get confused with this downward trend right here. It was a downward trend, and then started to rise up. It's rising
Mhm.
up, then it had a resistance at this point, from
Mhm.
which the price started going down. And then it had a resistance from up here, and then it had a support right here. And as you can see, the price is getting squeezed between the wedge, and there is the breakout. Now, they haven't shown us
Mhm.
what actually happened after that, but we can expect a really, really big downward move here. Obviously, after a retest can happen. So you might want to keep that in mind, that a retest can happen. You have to manage your stop loss according to that. And even if it's rising, then you have to maintain a retest. Like always have a stop loss, because I tell you that whenever a market is highly volatile, right? Whenever market is gonna give us a sharp down upper move, there could be always some tragic accident over there. There could be always any manipulation, anything that could happen over there. So you don't want to like not have a stop loss, and then it like reverses. It gives you a false breakout, because usually there's something called false breakout. Now, what's a false
Mhm.
breakout? False breakout is happens when the price, it does break your trend line and you think it's a breakout, but after that
It
breakout,
reverses.
it just reverses again and then just starts to rise up, and you are like, what the hell happened here? So to avoid that, you should always have a tight stop loss, and I'm gonna actually tell you how can you tell whether it's a confirmed breakout or it's a false breakout. I'm gonna also teach you that there's a way where you can tell for sure 100% that if it's a false breakout or an actual breakout, but obviously not 100%. Still, everything is 80%. So still, that is very good. That is very good thing that you have to apply it with it, and it has to do with volume. So I will tell you that how by looking at the volume you can tell whether it's a fake breakout or an actual breakout. So you can manage your stop loss. At least you can manage your stop loss very effectively with that, and the chances of you getting a loss are slim to none. Make sense or not?
Yes.
Sam, I faced the same situation with the Steam 2 days back.
Yeah.
You guys got the signal for breakout,
Yeah.
and then I bought, and it had the same scenario. Then my stop loss got hit actually.
Oh, what kind of scenario it had?
It's same. It just went down. So it went up, and then it went down.
Yeah.
And unfortunately, my stop loss is not good enough. It hit,
It's fine.
and
We all
then
learn.
yeah, and the next 2 days it just keep on bumping up. So
They do that sometimes. They get you. They love to get you. And when they get you, they're like laughing at your face, and you can't do anything. But that's how we
yes.
learn.
Yeah. That day I got 2 signals from a CVC and Steam, and I hold CVC, but Steam got hit by stop loss. Yeah.
Yeah, it is. It happens sometimes. But we're gonna just like learn from it and then just like keep moving. That's the key to it. If you keep moving, if you keep on doing the grind, if you cannot give up, then that's where the success lies. So that was one graph that we see, and then there's another one, and this one is as you can see. Now I want you to have a look at here. If I weren't had drawn these lines, would you be able to spot this rising wedge pattern?
No.
Absolutely not, right? So how do we actually find it? We find it by just absolutely drawing the lines all the time. Just like open up a graph and start matching the lows, start matching the highs like blindly. Don't think, just start matching the lows, start matching the highs. Don't do anything. Just start matching the highs, start matching the lows. And you will see it.
Okay.
If you were doing something like that, then you would have probably got this one too, right? If you were matching the highs over here, you'll be like, oh my God. You will be matching the lows, you'll be like, oh, there's a wedge over here. So see, the only way to actually spot these in the actual graph is to just keep on blindly drawing the lines, right? There's no other way to actually spot these because like only like those ones who have like a 50-year-old experience, they'll be like just like scrolling through the graph and like spotting all these things. But for us like beginners, we have to actually do manually and just like just keep on drawing the lines and then actually spot these breakouts and these chart patterns actually. So as you can see, we have a high, another high, and then we have this lows over here. This one low is here, and then one low is here. So if I haven't drawn this thing, this pattern over here, we would have never seen it.
No.
So as you can see, the graph
No.
was rising, squeezing in the wedge, and then gave us a breakout. This candle gave us a breakout. And if I were to put a stop loss over here, you can see that it hasn't hit. And you can also see that this was a breakout right here. The breakout was right here, but then it come to retest again. So there would always be like a retest. So you might want to keep that in mind. Make sense or not?
Yeah. How many
Yeah.
and how many loss you should consider in the wedge? It's minimum 2.
Come again? What? I didn't get you.
So a wedge must have minimum how many highs?
It depends. It depends. It could be anyone. Least is 2, obviously. Without 2, you won't have it. But maximum is it could be many highs and lows. It could be like a long wedge. It could be like a short wedge. The other day I give you a signal. Which one was it? I think it was a Kava or something. Just see, I have given you that it is breaking out the falling wedge pattern.
Yeah.
Kava.
Yeah.
I'm afraid to touch Kava. I don't know why. It has a monitoring tag on. I was.
No, I'm just saying that it was giving us the breakout. That was like a breakout, but like obviously it was like a bigger time zone breakout. So it was only spot. Obviously the breakouts we give you is they are usually like on bigger time frames. And so yeah, we gotta be.
Could you show that example now? The Kava. Could you
We
please
would do
show?
that. We would do that definitely. We could just open up the
Let's
graph
look
and
at
like
Kava.
definitely do that.
Because that's the one I didn't spot it yesterday. I'm not sure.
Oh, don't worry. We got it. So all of you with us now.
Yes.
All right. So there's another illustration, and this one is basically the falling wedge pattern. Now we've started on the falling wedge slides. Let's take a break and actually go onto the graphs and see for ourselves if we can find something right now on the graph. And you can see the BDC. That's the BDC right here. It's consolidating. And the only way to find out is to just draw lines. Now, if I were to find a rising wedge pattern, it would take me some time, obviously, and that's what you guys' homework is too. That you have to go around and find out some rising wedge patterns, see if you can find some. And because like rising wedge patterns, I have told you, like once they form, they give us like a big treat. That's like a treat for traders. If they find one, that's like a big move incoming. So obviously they would be a little hard. Like remember when we did the double top, double bottom patterns? We could find like many of them because it was, I told you, they were like super common patterns. They were like everyday patterns they're forming. Even right here, you can see there's like a double top pattern and then like boom, it's like falling. Although it is a pseudo double top pattern because we're like rising. No, it's an actual double top pattern. Yeah. So it would take some while for us to wait. Let's take a look at it over here. Now there's one way to look at it, that it could be like a pseudo falling wedge pattern, that it was it's falling and then it is given us a breakout and then it is moving up. But for actual ones, but like it is falling from a distance and then it is rising and then falling again, so you could count it as a falling wedge pattern. So both of them are basically same, that it has to concentrate inside a wedge and then give us a breakout in the opposite direction. That's when the reversal happens. So you can see that the price was previously, it was decreasing. Can you guys see it?
Yes.
So you can see that the price was basically decreasing, and then it started to consolidate in here, started to concentrate in here, started to like fall in a wedge, and then there was the breakout. And as you can see, the retest happened too. If I were to zoom in, can we zoom in on this thing? I don't know. I have the annotations on. So you can see that the retest has also happened. It was a small retest, but then there was like a big giant move. Look at this move right here. So obviously you're not going to find the very perfect.
Shan, the reversal happened. So irrespective of which direction, the reversal can go up or down. Huh? So here, the wedge is slanting down, but the reversal happened at the top.
Exactly. If it's going up, then the reversal would be if it breaks the downward trend line, the lower trend line. Let's say if I were to annotate it real quick for you, if it's going upward like this, right? If it's going upward like this, and we have trend lines like this, then only if it breaks this trend line right here, forgive me for my sloppy diagram, then it would give us a downward move. And if it's
Mhm.
going downward like this, then it will only be a breakout. It would only be a reversal when it breaks the upward trend line, the top trend line, the trend line which is joining the tops. So the resistance line.
Yeah.
So that is when the breakout happens, and you can see it's like a giant breakout, and it was like a good opportunity to invest in Bitcoin right here when it was following this wedge pattern. And that's like a boom, like a giant upward move. So I want you guys
Okay.
to now look around, just like scan them all. Today I taught you one of the most important patterns. And I told you this when I was telling you about the double top and double bottom, I knew. But these are like the giant patterns, like the patterns which would give you giant moves. Like these are the patterns which you do not want to miss. If you can find these patterns, the chances of you getting a loss or hitting a stop loss, they're very, very slim because of breakout from this. Because like the thing is, over here the price is consolidating, and it shows that the sellers, they are losing control. Whenever there's a rising or falling wedge pattern, whichever trend was there, those parties are losing control. That's what the chart pattern is telling us. Right now it's a falling wedge pattern. That means that means the sellers are driving it, right? The sellers are driving this trend. They are selling, 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 so the price is going down. But the wedge shows us that the sellers are losing control. Same thing with the rising wedge pattern, that the buyers were in control, they were increasing the price. But what happened was that a wedge started to form, and wedge tell us that the buyers are losing control. So now it's going to be reversal. Obviously, I will tell you many other things, that when you will combine with these, you will have much more confirmation that whether it's a true breakout, whether this chart pattern is actually going to go into the direction which we're thinking. And those are going to be indicators. Those are going to be candle patterns. Candle patterns do pack a punch in this. If you know a couple of candle patterns that are actually really good, and they are like there are some candles which are like really bullish. There are some candles which are like really bearish, so they'll help a lot. So I want you guys, are you with me?
Yes,
Yeah.
Oh yeah.
I'm here.
So Ahad, and we have Tina with us, and
Yes.
we have Robin with us, and we have the other Robin with us too. All of you guys, I want you to find as many setups as you can. That's your homework for 1, 2, 3 days. Because the thing is, the more practice you can bring it on this chart pattern, the better. Because after this, I'm going to be teaching you other patterns too, but they're not going to be as significant as this one. So the time is already up. So I will see you in the next class. Be sure to do all the homework and share it with me. I will see what kind of work you guys are doing, and we'll have a discussion on that. Maybe we'll have a session tomorrow too and discuss what you